If you're retired, close to it, or keeping a 401k for that time down the road, we all keep an eye on the economy and the stock market. Wall Street is wrapping up its fourth straight month in a row of gains, so we wanted to hear from our friend Alan Lancz, Lancz and Associates, an investment advisor. Good to see you. I have so many questions in so little time.
No problem. Good seeing you.
There's talk that we'll get a lowering of interest rates by the Fed next month. Do you expect a big bump on the stock market from that, an impact on the economy, or it depends on how big of a drop it is?
Yeah, I think if it's 50 basis points, a half a point, then you'll see the market react. Otherwise, it's already built in. So that's what you have to be careful with the markets. If it's anticipated, a lot of times it's already priced in, and that's why you had a good rally, July and August and what have you.
Second quarter numbers for companies have been pretty good, considering the dire predictions from the tariffs impact. Everyone seems to have taken the tariffs in stride, settled in. I mean, I know they're still fluctuating somewhat. What's your read on all of this?
Well, I think we talked in April, and that was a great buying opportunity. The market overreacted. Now, I think they're overreacting a little bit on the upside, thinking that it's not going to be a factor. It will be a factor. AI is still fueling a lot of this, so that's going to be strong. But I think we're probably in the sixth inning, bottom of the sixth inning of this AI and technology craze. So we still have further to go, but now we're starting to transition portfolios to more defensive, interest rates going down, having some high income investments, even stocks. Healthcare has done very poorly, so there's some good bargains there rather than chasing things that are up 10 or 20-fold.
I know we first met you during COVID. I was doing weekly snapshots of the economy with a various number of experts in the field. And at that time, we were starting to talk a little bit about AI. And little did I know that how it would even change my world in some capacity, and probably your world is too. But I think a lot of people in any occupation now is seeing the impact. What are you surprised by how rapidly this came on and it's being used?
Not really. Really, we have two people in our offices that have been working with AI since 1996 and 2014. So it's been around a lot longer. I think the last 4 or 5 years, people have heard about it. And you get to that point where now it's being used and brought out, to the public, so people are aware of it. But really, AI has been around for quite a while, and it's taken a long time. My mentor, Sir John Templeton, was talking about information overload, and the internet came about, and I can see that. I see AI as a way to, as far as fix that information overload problem if it's done the right way. So that's why we've been enthused with AI for a decade and continue to be so. It's just not the first or second inning of AI. We're in the fifth, sixth, and I wouldn't chase and have a lot of your 401k like in AI, but still participate because I still think it's going to have further to go.
A lot of analysts were talking about a lot of money being on the sidelines in the past year or two for whatever reason. Maybe you can explain that. But is this a time to bring that money off the shelf and get it more active? Or with prices high right now, with stocks going up, you want to stay out until you get a dip to jump in?
Yeah, on AI and the things that are high, I would wait for a dip like we had in April. But on other areas like healthcare, financials, and what have you, I would buy companies that have good dividends, that are strong and what have you. We had a lot of companies that went down because everybody's putting their money in tech. So, I think you'll see that transition into other parts of the market. We talked about utilities last time as a way to play AI. You can get a 5-6% dividend, and utilities are going to grow with AI because you need that power source. And those are starting to move now. So those are, I think, the areas you want to look at, especially with a 401k, because you don't want to have all your money betting on AI and you're in the latter stages.
Everybody has their eye on NVIDIA. That's been in the news a lot lately with their stock price and their future. Are there other companies like NVIDIA out there, or is this strictly the way we're going to be following?
Yeah, NVIDIA is the largest company on the planet now, $4.5 trillion. It's up 50% in the past year. But a company like Snowflake is up 120%, as opposed to NVIDIA's 50%. And they have applications that will help. So NVIDIA, it's going to be very hard from $4.5 trillion to go to 9, maybe 12 trillion. If that happens, you're going to see some of these smaller companies doing a 5 or 10-fold increase. So I think that's the way to play it now. If you have a lot of NVIDIA, I would actually, we sold something this week, not all of it because it's a good company still, but I'd rather diversify. If you have too much of one company like that that's done so well, the higher it goes up, the more risk you're taking.
We have about 1 minute left. Healthcare, you say, is not doing very well. What's the reason for that, and how do you take a look at that?
Yeah, so there's some great companies like a Zimmer Biomet hasn't done anything in 10 years, and people are getting older. They need, as far as knee replacement, shoulder replacements, that's what they do. They're a leader in that. You got a good dividend. United Healthcare, it's gone down quite a bit. We bought it when it went under 300, and then Warren Buffett bought it. And now it's moved up. Those type of companies are good. They're almost like the tech companies were in April. They're just good buys for the long term. It might take a while, but I think diversifying into areas like that to have growing dividends, so you're not all in tech, makes a lot of sense right now.
Yeah, the cycles are fun to watch and react to all that. Alan, thank you so much for being here. Alan Lancz, Investment Advisor.